Hello,
Hello.
everyone. Maggie,
Well,
are we live?
we are live. We are making sure we're live on here.
Great.
Just give me a little second.
All right. Well, we're here today in our Facebook Live group, as we are every Thursday. Facebook, our group is called Purse Strings for Financially Fearless Women. And so ask your sisters and your aunts and your female friends and colleagues to join us free. And what we like to do during this time frame is present one of our Purse Strings approved professionals. And they offer a smattering of different expertise. Today we have Lindy, and she's going to talk a lot about those folks who are self-employed and how we get those buckets in order. And we're so grateful because so many women are starting their own business. I know pre-COVID, it was 1,800 women a day were starting their own business, which is amazing. Now, I know COVID has set us back a little bit, but I also know that a lot of women don't or can't return to a workforce because of, the barriers it has in terms of when you need to be there, when you can leave by. And, it's not flexible for their family life. And many, many women are trying to look for other opportunities, other careers, other businesses they can start, or maybe it's an MLM of some sort that they really love and want to promote. But nonetheless, if you have your own business, that means you have to pay your own taxes and make sure that you're putting money away for your retirement and all of these good things you are now in control of. So Lindy's going to explain that today and talk to some of those tips and tricks that we should know. Glad you're here, Lindy. Where are you calling in from today?
I'm in Minneapolis.
Okay, great. How's the weather there?
Hot.
Is it hot? It seems like it's hot everywhere. Everywhere. It's beautiful here today in Chicago. Yeah, some might say it's hot, but I think it's perfect. So we had a lot of rain come through overnight, but it's been a beautiful morning. So as people know, Purse Strings is for women, all women who want to, step up and start gaining control of their finances. We provide women free online tools and resources right through our website, pursestrings.co, where they can come in and noodle around, look at ask the expert questions that we have out there for them. We have life and money guides on lots of different topics. There's a wealth of information and resources out there. And then when women have, a financial question or transaction or purchase, something they need to do and want to learn more about, we have a whole list, what we call our Rolodex of Purse Strings approved professionals that they can tap into and peruse and look on our site and just connect with right through our Purse Strings site. Send an email or give them a phone call and reach out. These professionals were vetted by us. They serve the female market. They understand the plight of women. They really love to serve women. And women today are an underserved market. Most people don't know that they're a $23 trillion with a T, $trillion underserved market, and women will come into the largest transference of wealth in history in the next couple of years. And that's because of that swell of baby boomers who are aging and dying off, will be moving their monies to their next generation. So women are set to come into some money. So a very powerful market, a very underserved market, but that's what Purse Strings is for. It's to help those women really gain control, take back their own power, know how to manage their own finances, and leverage Purse Strings approved professionals who are going to help them do just that. So thanks everyone for joining us here today.
Yeah, it's going to be a fun time. I think we're going live everywhere. So if anyone wants to post in some comments of where they're watching from, that'd be great. We know you're here then. We have Lindy, which is awesome. I already have, I'm excited to learn so many things. And I posted this because, so many people, like you said, are just starting businesses at home and they're little side hustle is turning into more than they planned, which is fantastic. I see different artists selling their stuff in coffee shops or, the local places, restaurants and things, or, on Etsy. So it's really expanding. And, this applies to everyone. It's just those small businesses doesn't mean you don't have to pay taxes or different things like that.
Everybody pays taxes.
So if you didn't know that, here you go. But all right, let me get a little intro to Lindy and then we'll get started. Let me find my tab. All right. We got Jordan on and Julian. We got everybody coming in today.
Yeah.
So Lindy acts as a behavior coach, mentor, handholder, and an advisor, formulating a plan for the future. Her goal is finding a place of comfort with your finances and using the right tools to get you there. She works with women all over the country via Zoom, which is awesome because everyone's on that Zoom now. So she wants to help you reach your dreams and reach multiple goals. Share your goals, values, what's comfy, and will create your plan. She's also the founder of Create Financial Planning. And this is a new venture for you, right?
Yes, I've been in the industry since 2002, and I founded this business. I created my LLC in January of 2020. And so my Zoom plan was actually pre-planned pandemic.
Look at you on top of that.
Yeah, I know. Well, I do live in Minneapolis, and so they have things like blizzards. And this way I can meet with people regardless of whether it's really hot like today or really cold.
That's so funny.
Awesome. Well, that's so exciting. We're so excited to hear what you have to say today. So I'll give you the floor and let me know when you're ready for me to pop up some other tools that we got going on.
Great. Thank you, Maggie. The way that both Dr. Provost and Maggie help you to network and serve to generate more income from your business, I want to help you feel comfortable with the ebb and flow of income and help you, as Maggie said in her bio in the intro that invited you to the meeting today, to feel the freedom of being self-employed, even on months that are unseasonably slow. So thank you, Purse Strings, for having me. I'm so excited to share today. Today, I'll share when it comes to business income, how to track your income sources. Then we'll talk about how to plan for the ups and downs in income and how you can create stability, how to prioritize your expenses and savings, and how do you decide where to put your savings. And Maggie asked me to cover 3 specific questions. You may have already some pretty good ideas about the first one. What are the pros and cons of being self-employed? Another is, how is working with a financial advisor as a business owner different than working with one as an individual? And lastly, Maggie asked me to share what it's like working with me, or what are my clients' experience, and how am I and other advisors compensated for our experience? It sounds like a lot to cover. Hopefully there's time after. I have a special bonus. I'd like to throw in some questions to a member of the live audience to have you share your experiences and emotions around your business. Maybe we can do some one-on-one. Let's get started. Many entrepreneurs have multiple jobs, gigs, and side hustles. Here's how to keep track of money coming in from many places. To track your income, if you are still working a job while you build your business, you may have a separate W-2 income that you earn working from someone else that's not related to your business. Deposit that in your personal account for your personal expenses. Still keep track of the income as part of what makes your life work. For income related to your business, use an income tracking system. It can be as simple as a notebook, an Excel sheet. Utilize your payment processor, if it's PayPal, your business bank statements, or something similar. And you can track using an online tool such as Mint. You need a budget, but pick a place and be consistent. Start seeing the patterns, if they exist, of what months are highest income producing, if there are months with a lull, or if there are things that you are doing to grow your business and your income and they're producing results. Maggie, do you want to share the one-page Excel sheet that I have? So when are your highest income producing months? Pay attention to what of your highest producing activities. Maybe you love doing something, but it doesn't reach your audience or it doesn't produce income. So here I just have an example that shows, and I'll go into this in a second, but are your activities lopsided and doing the part of your business you enjoy, but it doesn't bring in more clients? I, for example, love financial planning, but sitting at a computer alone doesn't help me find people to help. So find out what's working for you and where you need help. I needed help making myself available to help others. That's why I joined Purse Strings. Maybe keeping track of your income and your income producing activities isn't a high income producing activity, and it's time to hire a bookkeeper. So here's what your income log should include: what you are getting from each income source every month, a total of all income for the month, a running total of both of what each income source has provided for the year, as well as total income year to date for your business. Seeing these numbers will help you make choices of where your time is best spent and show what are your profit centers. Or if there's something you love, but it's not creating the lifestyle you want, it can help you focus on how to make it work more for you. Thank you, Maggie. We can see how that works, and we can click off that slide now, please. When you receive income or payment for your skill, knowledge, and passion, know where it should be deposited and what you want to save for and pay with it. Separate business income. Be sure to separate your business income from your personal banking. Keep separate accounts. Taxes. Maggie mentioned this. Sadly, taxes should never be a surprise. They are eternal. Save for them and pay them quarterly. Prevent being taxed even more and dinged for not paying them quarterly. We'll talk more about taxes later. That's so exciting, right? But we'll talk about write-offs. When big checks come, it's not a windfall or found money. They're part of your plan, and treat big checks just the same as you do a normal check. Which leads me to, have you heard of a sinking fund? It's not the term that I would have authored, but it's easier to say than, I have this bill or expense coming, and I know I need to set money aside for it fund. A sinking fund is all of your annual insurance, subscriptions, education, seminars, property taxes, those things that you know are coming, but it's not a monthly expense. When they come, the sinking fund will be ready and waiting, and you won't have to go to a credit card for the surprise, unforeseen, tragic expense. In your personal life, these can look like home and auto repairs, veterinary bills, medical expenses, emergency travel to care for family. There are no surprises. These things are always ahead of us, and it feels good to be ready. If your business has expenses, it needs an emergency savings account just like your family does, especially if you do have variable income, especially in the first 3 years of your business. Plan to save for a minimum of 3 months, maybe even up to 12 months of your business expenses. I worked for a local corner insurance company for a decade. The company required that if you wanted to set up your own corner insurance office, that you would have 3 years of cash in savings, knowing that it takes usually at least that long to get a business up and running to be profitable. With 3 years of savings, you're going to feel safer and increase your chances of making it through those leaner early years. Lastly, be ready for months with less or no income. It won't sting as much with your buffer emergency savings in place. Going on to the next topic. Actually, it's 2 topics or 2 questions. How can you as a small business owner overcome the ebb and flow nature that takes away that feeling of freedom? And how can you continue to have your money work for you instead of always working for money? First, I'll cover cash flow in a very fancy way and how to prioritize it, tell it what to do for you and how to create stability and prioritize in a fancy way. Since I typically work with very creative people, I have this treat for you. Maggie, will you pull up the MP4 that I shared with you, please? I can't hear it, so I'll narrate. You have a sold out auditorium. You do a show. The crowd goes wild and the money is flowing in. The income from your business will be allocated to pay taxes for savings, business expenses, and to pay yourself. When you've paid yourself, here's how you can divide your goals. Imagine your income as a bottle of champagne and you are pouring it onto a 3-tiered tower of champagne glasses. The top tier is necessities and the rest trickles down. It's like Maslow's hierarchy of needs, taking care of your basic needs, making sure you have no debt, you're saving, and then self-actualizing if Maslow was at a party on his head. The middle tier includes your emergency fund plus your fund for slow months and bills that happen not on the regular, like taxes. Save for those. When a slow month happens, you'll breeze through it. Remember, large months of income or big tax refunds are not windfalls. They are part of your plan. Plan to use them wisely and your money will like and follow you. Thanks for sharing that, Maggie. To feel that freedom of being self-employed, you and your money have to have mutual respect for each other. You have to prioritize your life and put your money there. How the heck do you do that? So prioritize your necessities, your food, shelter, utilities, health insurance, what you need to thrive. Secondly, pay debt and save. And there's even room for fun. These are your variable monthly expenses or non-essential lifestyle items. You know what these are, regardless of what you tell yourself is essential. So how do you come about what are our necessities? List your expenses that help you thrive. Write them down in one place you can see. This should be pretty stable. It can be updated monthly, but it won't change a lot. It helps to see patterns and for you to decide what is a necessity. This part hopefully uses less than 50% of your take-home income. There's also some formulas in here about what housing should cost. So if you're thinking about a new mortgage or refinancing or rent, it's really important not to know just what you qualify for, but what you can comfortably live in and still meet your other goals in your life. Save at least 10% for yourself with a goal of 20. I've met some super savers who are able to consistently save 25% of their income. And remember, the IRS, if you're self-employed, you'll owe 15.3% on top of state and federal taxes for self-employment taxes. If you can, it's a good idea to save 30 to 40% of all of your gross earnings from your business in a separate account that's just for taxes. If you're paying down debt, it's still important to save so that you don't have to rely on credit when that next thing happens. Again, that could be part of your sinking fund. Have a goal for saving. It's easier to save when you're specific. Saying, I'm trying to save $30,000, for example, is easier in your brain than when you say, I'm saving for an emergency. It just doesn't have the same meaning. It's nice to have a marker to know what you're going for. Your emergency or soon to happen goals saving should be liquid and not at all at risk. Consider a high interest savings account. If it's at a different place than your current checking, sometimes the little bit of extra work to move money means it's more likely to stay there than if it's just in your checking account. And again, remember why you have the savings. It's there as a buffer for the slow months or for a not so far off in the future goal. Keeping that in mind will make it easier to let it grow and not spend it on a new guitar, online shopping, at happy hour, or on something spontaneous. In that month with lower income, then you'll go to your buffer account to cover the necessities for that month. To start a buffer account, if you have a seasonally changing income, once you've saved for retirement, taxes, paid yourself and your business expenses, in the months with more income, put the rest in buffer savings to be there to smooth out the lower income months. Depending on your business, it may feel good to have 3 to 6 months, or like the corner insurance office, maybe 3 years in a buffer savings account and in a buffer personal emergency fund as well. Buffer emergency accounts are where you want them. They're fully funded. You've saved into your retirement account and you still have money left. You, my friend, have hit wealth. Start saving into a brokerage account. Money in savings, in cash, doesn't keep up with inflation, and too much in cash can actually hurt you long term. I like to think of cash as like a strawberry. A strawberry is beautiful and bright and fresh and juicy today, right? But in a few days, it starts to get a little wilted and brown, maybe fuzzy, and it probably starts to taste like dirt. Cash is the same way. It gets a little wilted and not as crisp. And after a while, it doesn't keep up with inflation. It doesn't have the same buying power. Too much cash will not help you long term. It could actually hurt you. Unless you have so much cash that you don't care. Talk with an advisor to make sure you invest in a way that feels comfortable to you and meets your short-term and long-term goals. This is a good way to move forward if you don't have another immediate short-term goal that will require a lot of cash, like a home down payment or a new grand piano. We just mentioned wealth, being able to consistently live within your means and to save every month. Well, that comes from prosperity. That's when you overall earn more than what you need to live. When you have a sense of abundance, a feeling of positive flow. By doing these steps, I hope you feel both wealth and prosperity. Now that we're truly prepared, we've met our basic needs, paid debt, and saved, let's go down to the party, the base layer of our champagne tower. Remember, we do this work. We started our businesses because we're passionate about it. And so we can do fun things too. Of the 3 things, necessities, saving, and lifestyle. Lifestyle is equally important. I call it the soul candy category. Maybe actually doing the work is soul candy. But for me, it's also being able to afford to go to the ballet, seeing a band, being able to dance, living in prosperity. After you've covered your basic needs and saved for those dips in income, have some fun. This part can use up to 20 to 30% of your take home, ideally. If we look at our champagne glass tower, you're covering your basic needs first, have no consumer debt, and 3 or more months saved to cover you and your business during slow times, and you're living your best life. But don't feel entitled to always live your best life right now. Pay your future self. Imagine a 3-year-old running around with your wallet. That's exactly what is happening right now if you are not saving for the future. Plan to take care of yourself when you're older. Then you can act like a crazy kid again. I personally am planning to live to be 105. So I have a lot of taking care to do. When your basic needs are met and your emergency fund is full, then treat yourself. It's trickle-down economics with champagne. We've just covered how to prioritize expenses and savings. What does that even mean? Where do you put it? It can be as simple or as complicated as you feel comfortable making it, as long as it's something that you will actually do. If you want to go basic, at a minimum, have a business checking and savings and a personal checking and savings and your retirement account. If you want to distill more, you could have the checking accounts broken down into fixed monthly expenses and variable day-to-day expenses and a sinking fund for expected annual expenses. And you could have savings accounts for your emergency fund as well as goals. So if you're planning on getting engaged, maybe a ring purchase or a wedding or home down payment, travel, that thing you've been wanting. Or some bank accounts have a record keeping that allows you a single balance, but to see how you've allocated it within the account. That's probably easier for multiple small goals. But if it's for a house down payment or an emergency fund or a wedding, those may want their own savings accounts. Here's my tiny bit off topic, but not off topic tangent. Keep in mind when you buy a home to make sure you have money left over for the move, updates, repair, furniture, for that new perfect rug, and money set aside for ongoing home maintenance. Plan for 1% to 2% of the house's value every year for maintenance, even if you don't spend it this year. Years when you need a new roof or a new furnace, those years add up. And do not empty your emergency fund to buy a house. Of all the goals that have been met, once they've all been met and you still have money left over, then it's time to start investing. Remember the strawberries. Of the questions that Maggie specifically asked, what are the pros and cons of being self-employed? I'll start with, here are some disadvantages to be aware of. Both you and your business are paying half of your Social Security and Medicare taxes. Normally, an employer would pay half of that for you. That's the entire 15.3 versus 7.65% coming out of you and your company's pocket. If you have a W-2 gig, you only pay the 7.65% portion. The good news is that the employer portion that you paid as a self-employed person will be a federal deduction for you. You have to remember to pay quarterly taxes online and pay enough. If you earn $50,000, you can get TurboTax for free as an individual, but not if you have rental income, business income, or 1099 miscellaneous income, stuff that's on a Schedule C or Schedule E. If you're writing off student loan interest or itemizing, so actually you probably can't get TurboTax for free because we're business owners, but if you earn under 50, you can, so know that. Another disadvantage is there isn't an established savings plan in place with a match, so you must be sure to save for the future in the most tax-advantaged way for you. One possible disadvantage is the flexibility. Can you handle it? Also, it's a super benefit. The final disadvantage that I can think of is that you are the everything: marketing, sales, PR, president, bookkeeper, secretary, maniac, custodian, scheduler, until you can afford to hire someone to do those things for you. Then that's a powerful feeling because all you're both supporting yourself and another person is relying on you as well. And that's exciting. So the pros of being self-employed, we know we just covered the cons, but one thing I want to say is I love being self-employed for a million reasons, one of which is the confidence and faith in my own work and ethic. I always thought that having a job, being on someone else's payroll, meant security. It took life happening and a leap of faith to start my business, and I have never been happier. Security is what you make. You deserve the work that works within your values for the reasons that drive you. That, my friend, is worth a champagne toast right there. Being self-employed, here are a few ways that we can take advantage of our sole proprietor or Schedule C status. Some tax write-offs, and there are 15 that I can think of. I'll just rattle them off. The self-employment tax, internet and phone bills, meals, vehicle use, publications and subscriptions, business insurance, startup costs, retirement plan contributions, home office, health insurance premium, travel, keep accurate records, interest, education, rent, advertising. S corporations may be able to take a qualified business income deduction, or QBI if you like acronyms, and deduct up to 20% of their business income in addition to the write-offs listed. That deduction is taken off of your tax return, not the business's. And ways to reduce your self-employment tax are increase your business expenses, but not just to increase them. Be wise about it. Pay your health insurance through your company, for example. This is often a credit to your taxes, and a credit is applied directly to your taxes. It has more impact than a deduction. Filing as an S Corp will also reduce your self-employment tax, but make sure it's right for you. The major difference is an owner of an S Corp can be considered a company employee, where members of a regular LLC are considered self-employed. Some of the cons of an S Corp are for most small businesses, there are a few drawbacks to S Corp taxation. Depending on your business, switching to an S Corp might mean filing additional tax forms or setting up a payroll system. If your company isn't making much money, the additional hassles may outweigh the benefits. An S Corp may also not be the right choice if you plan to bring out outside investors or retain profits in the company bank account. Something else might be a better solution. Additionally, you can't file your own taxes until the S Corp has sent you the K-1 to report your share of income. And if you have an S Corp, you pay yourself a salary, you'll receive both a W-2 and a K-1. Also be mindful to pay yourself enough to not get noticed by the IRS, because S Corps tend to be audited more regularly than LLCs, and also to make sure that you pay yourself enough to qualify for your own Social Security benefits, which luckily isn't that much. It's less than $6,000 a year, so hopefully you're earning that. Income can be considered as salaries, commissions, tips, vacation, and severance pay. What is not considered income for purposes of Social Security is investment earnings, loans, or gifts received. Maggie also asked, how is working with a financial advisor as a business owner different than working with one as an individual? This dovetails perfectly because as a small business owner, another pro is you get to choose how you save for retirement, which also may change your tax structure today or in the future. You have access to so many different types of retirement accounts, and they all have different situations where they're most appropriate and come with their own pros and cons, as well as different levels of savings, different ease of setting up and reporting to the IRS. As a person who is working, you have access to brokerage accounts, IRAs, and maybe a Roth IRA. As a business owner, you also have access to a SEP IRA, a simple IRA, a solo 401k, a Roth solo 401k. You can even set up a health savings account to coordinate with your health benefits. Now to answer Maggie's question about what's the difference of working with an advisor as an individual versus as a business owner. Well, working with an advisor as a business owner, in addition to planning your personal life situation, in the personal situation, you'll talk about how long you'll work, how big you want your fishbowl to be now and in retirement, examining tax efficiency today and in retirement, saving strategy, the how much and where, your investment comfort zone, how you want to help your kids or grandkids with college or surprise them with money for weddings or other life gifts, how you want to travel, when's the best to start Social Security, and how to plan for extra help at the end of your life, and leave money and a house for your partner, reviewing if your assets and income are protected, that there's money to cover estate taxes, that all your wishes are known, that you have beneficiary and estate documents in place, and a plan to build a legacy of charitable gifting or a family legacy, and someone to coordinate with your CPA, lender, banker, and your attorney. There's a lot. In addition to this, putting the puzzle pieces of your life together, a financial advisor will help you with your business to establish how much money you can or should leave in the business, your goals around if you will sell or if it's a next generation business, what this looks like to you, how you price it to make it affordable to sell. Is the sale of your business your only retirement plan, or do you have other eggs in other baskets? A financial advisor for your business can also help you see what your expenses are and if they're categorically appropriate, and will help you review your business plan, may encourage you to charge what you are worth, which is probably more than what you're charging now, and may help you negotiate pricing, prioritize spending, prioritize goals, choose how much to save and how to save it, and help you take action. I'm consistently appreciated by my clients for helping them accomplish things. One thing at a time, we get a lot done together. Also, Maggie asked me to share what it's like working with me, what's my client's experience, and how our advisors compensated for our experience. Well, it feels like I just talked about what's the experience of working with me or an advisor. So for fun, I thought I'd give you a list of questions to ask an advisor to see if they fit what you want. And in the meantime, you can see if your personalities match while you're having this conversation with them. Ask your advisor, are you a fiduciary? A fiduciary always works in the best interest of the client to give the most suitable advice. Even if they are required to sell something from their company, they might be a fiduciary in recommending that another company would be a better fit for you because it would be more suitable for you. Make sure they have that freedom. Ask them, how do you get paid? This is kind of like asking if they're a fiduciary, but not exactly. Advisors can be paid several ways, even by the same client. Commissions, fees, subscriptions. Commissions are paid if you buy something, an insurance product, a stock, a bond. Someone who says they are fee-based could still earn a commission. Earning a commission is not a bad thing. It's how the industry was started, and so much good has happened for people throughout the last 70 years since this industry was started. It's just important to know, and that it's okay to ask what their commission will be if you follow their advice. I don't want to disparage all the good work that's been done in this industry over the decades. Just know and understand and be comfortable. A fee-only advisor versus a fee-based. A fee-only advisor will charge either an hourly rate, an annual planning fee that may be broken down into monthly subscription, or an upfront fee for the plan. Also, if you're investing with someone, they can still be a fee-only advisor, and they may also charge an assets under management fee, which is different than a commission, which leads us to our next question. What are my all-in costs? Assets under management fees vary wildly depending on where you're investing, the type of account, And if you have an advisor, make sure to ask if there's a fee from the company, a fee for the account, a fee for the advisor, and understand what are the costs for what you're buying or investing as well. Ask the advisor, what are your qualifications? Do they have a string of letters behind their name? Some of those letters mean they're specialized in selling insurance. Some mean they could design a specialized portfolio. They focus on planning. Another designation may mean they specialize in working with senior citizens, or another with divorcees or with LGBTQ. Ask and they'll share their special interests with you. Ask them, how will our relationship work? Or will I be working with you or pawned off to some junior associate? Am I important to you? That's what you're asking them. Also ask how they prefer to be communicated with and how easy it is to schedule with them, and how often you'll hear from them or meet. If you're worried about the market, ask if they reach out and make sure you're comfortable with their style. What's your investment philosophy? Some advisors will handpick your investments, others defer to others. Decide if you have a preference and what will work for you. Is there something important to you? Ask the advisor if they can help you invest around your values or if they share your values. Ask them, who's your custodian? The reason to ask this question is you want to work with an advisor who has chosen an independent custodian, a large organization you'd know by name, as the place where your money and investments will actually be held. Instead of choosing to be their own custodian, somewhere you can easily check your balance online or in an app, it will protect you from fraud. What taxes should I expect if I invest with you? This is making sure the advisor is thinking about taxes, and you're also trying to learn what will be yours after your taxes and fees are paid. And finally, ask them, have you worked with someone like me before? And maybe ask them to share an example of what that client experienced. Today, we've covered how to track your income sources, to record them and see patterns. We've talked about how to plan for the ups and downs in income to create stability by knowing what your life costs, setting aside funds on high months to even out the low months, and how to prioritize expenses and savings so that you feel the freedom of being self-employed, how to set savings goals and the types of accounts your money is flowing into, the pros and cons of being self-employed, how is working with a financial advisor as a business owner different than working one as an individual, and what's it like working with an advisor? What do clients experience, and how are advisors compensated? I was hoping to give you a simple rule today: save this much, spend this much, put it here. But the truth is, each one of us has a completely different business and life. And so the simple rule is you are unique and you deserve unique advice tailored to your life and your business. I'm not saying you have to work with me, but please work with a professional planner like myself, as well as a CPA, a bookkeeper, and an attorney. And if you're a financial advisor, you should also work with a financial advisor. I've known too many who suffered from the shoemaker children have no shoes syndrome. It's equally important for you to be accountable and have a second opinion. If you'd like more information or to discuss your personal situation, here's how you can reach out to me. Maggie, can you share my contact page? And it feels to me like we're perfectly on time. I'd love to share some questions from a mentor of mine, which have helped me to grow. Will a member of the live audience please volunteer in the chat to answer some questions for about 15 minutes to share what your experience and emotions are around your business?
Wow, that was wealth of knowledge, wealth of knowledge. I'm going to, we'll wait a minute to see if somebody volunteers. Someone should definitely step up. I just know sometimes it's a couple seconds lagging. But wow, that's so much information you just provided. And I love that you already decided that you're living to 105.
Yeah.
That's great. That's what we need.
Healthy, like high quality, good life.
Well, of course, of
Playing
course.
Sudoku and word finds and walking and dancing till at least 103 or 4 for sure.
Of course, of course. While we wait for someone to reply, I do have a couple questions for you. And one of those is this large emergency fund that we've been talking about. Where is the best place? So, we have our large emergency fund, and we know it's supposed to be easy to access, but it's also so much money. We don't really want all that cash on hand. What do we do with it?
Well, if it's truly an emergency fund, I would leave at least 3 months in cash. And then you can find out with your advisor what your comfort zone is. And if you didn't enjoy the thought of having, for example, 3 years in cash, which is a lot, strawberries, maybe even amount of cash, then you could talk to an advisor and set some parameters. You can have a different investment strategy for different accounts. So you could have one brokerage account that is considered your contingency fund or that buffer account. And you could have another one that's long-term, that this one is going for my retirement. This is where I'm saving. And so they can have completely different outlooks and strategies.
That's awesome. So we got a volunteer. We have Jordan stepping in today. Her business is pretty new, so she doesn't know how much she can help, but she is all about it. And we are all about Jordan's new business. So what do you got for her?
Hi, Jordan. Thank you so much for volunteering. I love your bravery. Tell me, what is your business?
I'm going to answer that for her. She's a social media expert.
Excellent. So Jordan, easy for me to say. In 60 seconds or less, tell me, please, what is your vision for you want your business to look like in the next 12 months if things go well?
All right, let's see what she's going to say here. I'm excited. Excited just to see what she has to say. So she said yes to, that's her business. Let's see what her response is going to be. She's probably just typing away. Put her on the spot. Okay, let's see here. She says she wants to be helping approximately 10 small business owners manage their social media strategy and build out 3 to 4 courses that help others DIY it.
Love it. Jordan, if you do that, how would your annual income change from what it is today? Granted, I know you're a brand new business owner, but what would that look like for you?
Let's see what she has to say. We love Jordan. She actually does our social media, and she's recently left her company to go solo, which is super exciting. She said, I would have a lot more. I'll share in 1 sec. I also loved how you talked about, really, you need a team of financial people on your side. It's not just your financial professional. You need your CPA and you need all these other people as well. Even if you're a financial professional, you need your own financial professional. It's the same with like therapists and things like that, or doctors. You need your own person. I mean, even a haircut, somebody else cuts your hair. Usually do it yourself, like.
I did cut my hair in the 80s.
I mean, okay, everyone has cut their own hair at some point. Especially during COVID, who knows what people are doing. But it's true. I mean, we even say just like for your own financial needs, you need these different people as well. Even for your business, you need these other people, which is awesome. Let's see. So she goes, ideally have a mix of clients that bring in about 10 to 12,000 per month in revenue from the social clients, and hopefully another 2 to 4,000 per month in additional e-course revenue. Those are great goals.
Awesome. And Jordan, and again, in 60 seconds or less, how else would your business be different in the next year if you could just make it your ideal?
Picture perfect. see what she has to say. I'm going to bring Barb in for a minute to say hello.
I'm loving this because I do know Jordan. You know what I love is I talk to a lot of business owners that are just starting out, and it's scary, but they have a mission or a passion, something they want to do. And if you don't get your financials structured right out of the gate, you could be in for a lot of hurt. I've heard the term forensic accountant, which doesn't sound like fun. It sounds a little painful, but
yeah,
somebody who has to investigate everything, right?
I do recommend hiring a bookkeeper right away, because the way that bookkeeping is done it makes no sense.
Yeah.
It is opposite land and crazy. So, and to yes, just get QuickBooks or have somebody help you set it up. You can find somebody on where you can hire somebody to help you, even if they just help you set it up the right way, or go to QuickBooks Pro and do it online.
Get it done.
Please. Yeah, you don't want that forensic ever.
So Jordan said she'd have 2 to 3 contractors that she works to help with I work to help with the VA, accounting, financial management, and maybe someone helping with the e-course side. She's also hopeful to be doing more teaching, guest lecture on social media, and marketing for free. And she would also like to do 1 to 2 volunteer projects per year.
Awesome. So Jordan, what would your life be like if this happened?
Good questions here.
Yeah, very good to ponder. And really, it's a lot of what we talked about with Linda Lingo. It's kind of being very intentional, right? Like you said, it's not just I want to save money, but I want to save $30,000, you know, or what does it look like for you, and being able to describe it, right? Like Jordan did so lovely here about, you know, she'd like to have contractors working with her. She'd like to have a VA working with her.
And do pro bono and volunteer.
Good for her.
Amazing.
She would spend a lot more time at the dog park with chicken and waffles. She'd hopefully travel more and have more freedom to work where I want, when I want, just do what she wants to do.
And we know chicken and waffles are her dogs.
I used to know some dogs named Duncan and Donuts. So
that's awesome.
So, Jordan, what would be the impact of these changes in your life?
I'm sure it'd be wild and positive for sure.
We're already telling her what it would be. It'd be freedom, financial freedom, and we'll see what she says. It's like we're waiting for the answer, like
drum roll, please.
Yeah. But this is really good because, you know, starting your own business is really hard. And when you said, you know, you need 3 years of money in the bank, or even 3 to 12 months, that's a big chunk of change to think. I mean, just to get started, I need this much money. And
well, and we're all different too. Some of us have partners with a good income. Maybe we have a good job and or I like to call it my good paying, icky job that I want to move away to my maybe not as well paying, great job, right? So and we're all in different spots. Yeah. Some of us are single. And so how do we slide into that? I mean, most financial advisors that start their own firms are doing some side hustles. I know I did a lot of dog walking over the last couple of years through Rover. Get exercise, I can listen to podcasts, you know, so
we're all doing it,
right?
Yeah.
So Jordan says, I think I would have a lot of positive impact on my mental health. Leaving my full-time job last month already has. I have a husband with some health conditions and want flexibility to be there for him and help with doctor's appointments and things as needed. We'd also love food, met through food blogging, and so we want to travel the world and try new food. She says she'll also probably gain a few pounds, which it's worth it. It's worth it.
So Jordan, on a scale of 1 to 10, how important is doing this to you?
It better be a 10.
I know, right?
It better be a 10.
I can't imagine it would be any more. It's probably a 20 or 100.
You've got so much with your husband, your dreams, right? I mean,
yeah.
Yeah. Traveling to eat is great. 10. I have no backup job anymore.
awesome.
She doesn't need one. She does a great job.
So not to end on a bummer note, but Jordan, in 60 seconds or less, what's not working in your current situation?
Good question.
Poor Jordan getting pulled into all of our questions.
Hey, it's a good exercise for her and for us to think this all through as business owners.
It's very important.
Yeah.
Let's see what she has.
Survey says. Are these the questions you ask all of your clients, Lindy, when they work with you?
I prepared this list specifically for today, but it's been on my mind for a long time. So thank you for motivating me to do the things that I've been wanting to do.
Yeah. And thank you, Jordan, for participating, for playing.
Yeah. And I work so much with small business owners that I do exercises like this with some of them, but I wanted, okay, that's important.
It's a big one.
I need to figure out how to pay myself. So how does it feel not knowing how to pay yourself? So Jordan, how does it feel not knowing how to pay yourself?
And to bring in someone to help with bookkeeping. Can't give that away fast enough.
Smart. Yeah. Jordan, how much time do you spend working on your business?
I wish we could just tune her in live.
I know.
We'll have to see. Sometimes I've realized, at home that you can't really track your time. You don't track your time as well because you're just here at your computer and, you just flip it open or check your email on your phone. It's not just like being in the office anymore. She said she had a savings already, just mostly needed to figure out when to move money from my business bank account into my personal so things stay separated.
Yeah, do that. Good. So Jordan, what would it mean for you if you can't overcome 40 to 50? Okay, that's actually really good to
try to find some balance.
Right. Yeah. Well, and with your husband, if you're needing that flexibility, I'm glad you're not working 80 hours a week.
Yeah.
So Jordan, what would it mean for you if you can't overcome the challenges to make those dreams happen of having 10 small business owners and 4 courses and 12,000 of income from your business owners and 4,000 from your courses? What would that mean to you to not overcome those challenges?
It'd be a bummer. I'd be bummed.
That's the life of an entrepreneur. That's just work hours besides everything else we have to do in our lives, right?
Yeah. Yeah. Kids, animals, exercise, family.
She says it's okay if she doesn't hit her financial goals right away, but she wants to eventually. She thinks that the biggest thing would be the mental impact of feeling like I failed after putting all that hard work into something.
So Jordan, what activity do you have to do in order to be successful? What's the one thing that makes the biggest difference in your business?
Ooh. I think for us, it might be networking. Makes a lot of difference when you meet a lot of people.
Mm-hmm. Yeah, and also I would add to that it's providing a lot of really good value that other people talk about what they're gaining from being your client and then referring you. So having those referrals just come in automatically and as well as networking. Yeah.
Isn't it amazing when someone shows up on your calendar and you have no idea who they are?
Yeah.
She says for her right now, it's recognizing what I can do and where it would be beneficial to invest support from an expert.
Awesome. So, Jordan, you know Maggie and Dr. Provost really well, and you've just met me, but what kind of support or accountability would you like?
So she says, practice what I preach with people offboarding social media.
Awesome.
I feel that.
Yeah.
It's really hiring the experts that are not in your area of expertise. Like you said, hire a bookkeeper who's going to do it right so that you don't end up with a scramble at the end of the year when you have to pay taxes.
And it'll cost you a lot less, I'm certain.
We always say that invest in a professional so that, you know, there's not a lot of cleanup and extra cost, fees, late fees, anything like that, because it can get very expensive if you don't hire the right professional to keep you in line.
Yeah. Mm-hmm. So my last question for Jordan is, how are you right now? Are you okay? And I want to say thank you so much for volunteering. You're very brave and outgoing. I love that and appreciate you so much.
Yeah.
She said her biggest support needs right now are building a network of people who can help me succeed, finding the right people to surround myself with, and access the tools to help me find out what I can handle and where I need the support. But she's all good.
So all right.
It's all good.
Oh, good. Awesome. I'm happy for that. Yeah. I could take some questions, but it looks like we're at 1:00 as well. Maggie and Dr. Provost, thank you. And Purse Strings Network, thank you so much. I do hope this helps you create wealth and prosperity. Yeah. Thank you.
Thank you so much, Lindy, for coming on today. You could always reach Lindy at createfp.com. She's also one of our wonderful Purse Strings approved professionals, so you can check her out on our website, pursestrings.co. And we'll be here again next week with another great, Facebook Live. So we're so happy you could come on today, and we'll talk to everyone soon.
Thank you,
Lindy.
Thank you.